Welcome back, everybody. Let's have a look at the devastation that we've woken up to. That shouldn't have taken us completely by surprise. I've been talking this week about a potential situation like this, and to be I suppose on the back foot waiting for something like this. It shouldn't have taken us by surprise if you watch my channel or if you're in the Patreon, which is why I'm going to show you a little clip of something I was talking about on the Patreon. And before you all decide to shoot me, I didn't keep this from the general public. This was a little clip that I recorded while making the Patreon live stream and added to my channel. So this is about 2 or 3 days old now. So I just put it on. So I did this on Wednesday. So let's just have a little listen to this. And so 50,000 can be marked off. Now, obviously, if the markets pull back in a devastating way, like they did in March, which I don't think they will, but we could get a miniature one of them, then yeah, you could get a wick, a nice good sell-off wick, to be honest with you, down to much lower areas into the mid to maybe even low 40s. I'm not saying this to scare you. I'm saying this to tell you that that I'm not ruling it out, because black swans happen, and that's why they are called black swans. 40,000 seems relatively strong. Tops over here, supports over here. Look, if it breaks down, it breaks down. It's a buying opportunity. And what's that bloke called? Carl from the moon. What's his catchphrase? It's exactly as expected. Look, at the end of the day, I've been saying for this last week that although we can look at charts, and charts are useful, and charts are usually very useful, there are other factors at play, and there's I think I said that there's a portion of my mind that's fixated on the outside world and what could take place as a result of all these things that are happening out there. So you've got tapering, you've got stocks coming down, commodities all coming down, and you've got the Megatron virus, which I've been referring to, which is all basically it's created basically a massive sell-off. And back in March, when we saw the last crash that was caused by similar circumstances, it was an unrealistic crash, but it happened all the same. In many ways, this is like a repercussion, like a recycled event, basically, which has happened down here. So it's happened now. So it shouldn't have taken us at all by surprise. And again, like I said on that video a few days ago, the one that I just played a clip of, even though we can mark off certain areas based upon the chart itself, there are other reasons why it could break down further. And the mid to low 40,000s essentially is where we are at right now. We are just closing in the mid 40,000s. We had a wick down to the low 40,000s. So exactly as expected. So what are we going to do from here? Well, to be honest with you, it's going to take a little while for this to pull itself up, and I wouldn't really expect it to do it immediately. I marked off that $40,000 area, and there's a reason for that. It's because it's a strong area of support, strong area of resistance, and currently we are above the 50 exponential moving average, which is a good place to be for a weekly. So that's the 50 weekly, right? You can see on this big dump that we had in May, we spent a fair bit of time accumulating around this area. We even dipped a little bit below it, and closing below here is where I would generally start to think about potential bear markets in play. I'm not thinking about a bear market right now. I'm thinking about a large sell-off in stocks, commodities, and now crypto. It's all very much intertwined. I keep saying this, I keep trying to push it home. It's extremely intertwined. So everybody that sees something like an ETF and goes, whoa, ETFs are good, but it also is bad as well, because it offers the opportunity for large amounts to shorts. To be honest with you, let's pull back from all the madness and speculation. Just have a look at the chart itself, and we'll focus on that now. So we've got the sell-off. So we've broken down below certain areas of importance. Mainly the most important, really, for continuation in the short term, which is the 20 weekly. So that coming in around this level, about 51,000. So we've gone down below there, straight down below there. At the moment, we're catching a nice bounce. This is just Bitcoin. I'm going to show you something a bit more bullish in a minute, which should hopefully pique your interest in the market, especially for altcoins. So I'm very much still bullish on the market. That might sound crazy, but I really am. And like I say, this doesn't take me by surprise, and it shouldn't have taken you by surprise, because we have been speaking about it, not just for the Patreon users, but the standard YouTube channel. I've brought 2 videos out this week saying that this is a realistic possibility. So now we've got it, what are we going to do about it? We're going to catch this knife, It looks to me like the knife has already been caught, and we're getting the run up as a result of that. Personally, I think we're most likely to come back down again to retest some of these lower levels, maybe even that actual $40,000 zone, which is an extremely strong area of support. Now we might not, because a lot of this is a result of traditional markets. If you look at the Nasdaq, that actually had a decent bounce on the candle close, which is why I was a little bit extra surprised to see this massive sell-off, but it happened all the same. But again, you know, the crypto market usually emphasizes anything that the traditional markets do, and yeah, we're already in a downtrend, but the massive pullbacks that traditional markets have had are almost like a delayed fuse for crypto, and so yeah, they sold off and they started to bounce, and then after they closed, crypto sold off, and now it's starting to bounce. So we're going to have to wait and see what's going on for the rest of the week, next week, and probably throughout the month. But I know that's not very useful, but it is something worth thinking about. I am personally looking for this to range between 40,000 and back up to the top of the Bollinger Band. So 40,000 to about 51,000 or so, and we'll see which decides to break, whether we go bear or we continue bull. Personally, I think we continue bull. It's like I said in that little clip that I just showed you there. You know, if we get one of these wicks down here, it's basically an over-accentuated sell-off. It doesn't reflect the chart, doesn't reflect anything. It's basically just moving alongside traditional markets and the fear that's in the market right now. These giant sell-offs, de-risking basically, which is another portion of that video I was talking about, because I do buy stocks, shares, commodities, and I was talking earlier on in the week how I was de-risking some of those, like the more obvious ones, not the long-term positions, but the more obvious ones that are likely to be affected. And obviously, in hindsight, you should have probably just sold a lot, but you know, stocks, Bitcoin, a lot of these things are long term. Some of them are obviously going to be affected by the things outside of the charts. So they were sold off. They'll probably get bought back relatively soon. Again, a lot of this that we're looking at is basically a massively oversold panic selling. Basically, it's panic selling. But now it can become a tradable chart almost, but not immediately, because when you have something like this, and we see this on massive pumps, you also see it on massive dumps, it kind of breaks the chart to a large extent. The chart is essentially broken until it decides to find a new range. So that's basically what we're going to have to wait for. We're going to have to wait for a new range to be established. And at the moment, we don't have that range. This is one candle body out of what I would like to see, you know, at least a week or two or more before we can establish which way it really wants to go and which range it's going to go. You know, when we broke down here, I said, look, this is very likely to end up in an accumulation zone. We spotted the bottom, we caught the bottom on it, not immediately on the second on this one actually, we caught this one. Because it's all previous support resistance, you know, just as a little a little obvious thing. You can see that here we had this we had these tops here, we had a breakout, we had a retest, we had a breakout, and then I said, look, the chances are we're gonna bottom around 28 to 29. So buy orders filled 29. Look, I think we're going to be doing the same thing again here. I think it's very likely that we do come back down again. The range is going to be played out probably between these areas. I suppose we could probably try and map them out now. We've got historical supports and resistances around about these levels, which is about 49. Okay, so it's still below the 200 exponential on the daily, which is clearly going to be coming down now, and this historical support and resistance of 40. So we'll give it 40 to 49, but expect wicks above. I would be surprised to see wicks below that, but you might get that. So this is likely to be our range. Okay, so this is likely to be the range. We could call it an accumulation range if you like. It'd be a bit early to say that, but I think this is the range that is likely to be established since this big breakdown. So yeah, we'll probably come down lower, and we'll mess around in here probably for a little while. But I did say I had some hopium for you, didn't I? So the hopium is this. This is pretty awesome, right? So first of all, actually, we'll just have a look at the Bitcoin dominance chart. What the heck? You would imagine that this actually moved up, but it didn't. It's actually broke down further, which is pretty impressive stuff, right? Normally in an enormous crash like that, and if you to look at any exchange, to go to have a look at the winners and the losers, pretty much everyone's a loser. Everybody, and altcoins are even more of a loser. However, Ethereum's not. Ethereum's up, and it's not only up, it's broken out of a major level of resistance. So it's actually broken out. This is Bitcoin pairing. So it's actually broken out. This is pretty bullish, right? It's pretty bullish for not just Ethereum, but for altcoins in general. This is like something to take home here. This is something to think about, because not only has the market broken down, but altcoins have actually come out of this. Maybe not in the short term. We can see altcoins getting trashed massively across the board. But in the short term, I think altcoins are going to find some significant bounces, and if Ethereum can hold above this level, which is 0.08 of a Bitcoin, more or less, just short of that 0.79 of a Bitcoin, and retest it and continue up from here, then alt season, I'm not joking, a whole season is coming. Alt season is coming in the face of this massive dump. Like I said on that little clip, and I'll say it again now, that this dump that we've seen here is over exaggerated. It's not in any way related to crypto. It's more related to the traditional markets and everything that's going on within the world right now. It's kind of unrelated to crypto, and this is why I said for the Patreon members who watched it on Wednesday, I was saying, in a nutshell, I was saying, look, there's times where we have to accept that charts are meaningless. Maybe not completely meaningless. I mean, we kind of, I gave an area roughly mid to low 40s where a wick would go down to, and it's, so in that sense, it's not completely meaningless. But as far as a direction is concerned, in the face of something like what happened last night, it's kind of almost irrelevant, right? But now we can start to trade them again. But at the end of the day, like, a black swan is a black swan. We were looking at a black swan. There was cracks beginning to show at the beginning of the week. I made it obvious to show everybody, the cracks in oil and commodities and traditional markets, and the strength of the dollar, and all these things were very similar to how it was prior to the March crash. So I said, look, I think we're going to get the March crash's baby brother come along. So and that is pretty obvious now it's very similar to what we saw in March. It doesn't look it here. This looks devastating, but it's more or less the same kind of vibe of what we got here. So we saw the little cracks, we saw the downtrend, and then we finally broke down to a large extent. So we got the March crash's baby brother. And like I say, we shouldn't be completely surprised. We had been talking about it for a little while now, and for me, who use charts, this is how I make my money. Right? It's all about the charts, really. Very rarely do I look at fundamentals, but I do think about outside forces, and this is how we came to the conclusion that this is it's a realistic possibility, not the most likely, but a realistic possibility. And now we've got it. So, like I say, exactly as predicted. Look. At the end of the day, these things happen. It's happened. It is a buying opportunity, but as I prefer to chart these things out, I would like to see a range established before I decide to buy any more or long. I wouldn't be thinking of logging or shorting at this stage. I mean, like I say, the chart is essentially wrecked, more wrecked than the price, actually. The chart is basically wrecked. It's going to have to establish a range. We're going to have to let that range become more apparent over the next week or two, but the thing to take home really, honestly, is the strength in Ethereum, which is going to correlate to strength in altcoins, and it could actually end up with an enormous alt season, like if anyone was around in March, this is what happened. So you see Bitcoin price, creeping up and doing okay. Throughout this period, some altcoins were doing 100x's, and I think this is what we'll be looking at now. So we get a little view of the March situation over here. It doesn't look like much, in comparison to other alt seasons, or the most recent alt season that we had. But here it was basically March. The March crash kind of messing around here, and then finally it did pick up pace and it went absolutely to town. So it was a very nice alt season. Doesn't look like it on the chart, but trust me, it really was. Obviously, this has been the best alt season ever seen. This chart can be deceptive because there was a lot less money in it in crypto back around these areas. This is where the money really came into the market. This, most of the time it was trading at like $500 billion. From this point forward, the market cap was over $1 trillion, and I don't know what it is today. I daren't look, but it's still pretty high. So smaller moves on this chart correlate to larger moves, especially for smaller to medium cap altcoins. And with Ethereum telling us that it's actually not as bad as you might think, it's a little clue that I think an alt season might be born out of such a dump. It's not going to be born today or tomorrow, but over the next few weeks, I think it probably will. So essentially, what we're looking at here is shopping time. Really, it's shopping time for altcoins. I think altcoins is the main focus, and probably should be, but it doesn't mean that we have to look at it right this very moment in time, because all coins, all charts are going to be kind of broken in the short term. But I'm pretty confident now from seeing what's going on with Ethereum, excuse me, that it's going to work out pretty well. Anyway, thanks for watching. Hope you have a nice day. Take it easy.